Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the Market Site studio, we have John Worth. He is the Head of Research and Investor Outreach and Economist with NAREIT, the National Association of Real Estate Investment Trusts. It is great to have you, John. Welcome to
Great to be here,
Market
Jill.
Site. Let's talk about REITs and how they perform for January, just like the overall market, pretty strong for the month.
Very strong January, up about 10% as of the close yesterday, giving back a little bit today with some of the pre-Fed announcement market uncertainty. But we think this is consistent with what we've been expecting. In our year-end outlook, we felt like we were going to see in 2023 public and private real estate converging, REITs coming back, private real estate starting to price in some higher interest rates. So far, that's what we've seen. We saw that in the fourth quarter where REITs were up, private real estate gave back a little bit. And we continue to think we're going to see convergence between public and private real estate in 2023. And historically, REITs do pretty well in this type of economic environment, and we're expecting to see them have a good year.
I've never associated REITs with ESG before, but they really do kind of intersect when it comes to the G, governance. Tell us more about that.
Absolutely, and REITs, in the built environment, E, S, and G are all going to be important. I think as you know, one of the really underappreciated values of REITs is the incredibly strong corporate governance. And part of that I think doesn't often get picked up in how people talk about corporate governance is the value of the dividend. REITs are required to pay out 90% of their taxable income in the form of a dividend. Typically, they're going to pay out at least 100% of that. And providing that dividend back to the investor is a really powerful control. That really provides shareholders with control. They're getting their money back, deciding whether they want to reinvest that dividend as opposed to having large built-up cash reserves. REITs are providing that power to the investor.
And CEOs are compensations tied to performance, not necessarily assets under management.
Absolutely. The vast majority of REIT CEOs don't have any assets under management related to their performance compensation. Typically, their performance compensation is going to be very intrinsically tied to total shareholder return. So their interests and the shareholders' interests are perfectly aligned.
Why are more institutional investors increasingly turning to REITs?
Yeah, it's something that we've been seeing. We're out talking to institutional investors continuously, and we're really seeing them understand, one, REITs are real estate. It's a way to add to their real estate portfolio. And then it allows them to do that in some unique ways. One, it allows them to arbitrage between public and private market pricing disparities like we're having now, and that's a really important tool. We're also seeing them use REITs to get access to sectors of the modern economy that they may not be able to get to through a private real estate portfolio, data centers,
right,
cell phone towers, logistics facilities, healthcare, and on down the list. Get REITs that have world-class ESG attributes if that's one of their investment goals, and then diversify geographically. We've got REITs in over 40 countries. It allows you to get a global footprint kind of from your desktop, essentially.
So when you think about the ESG aspect, you're thinking like carbon neutral buildings or being more environmentally aware?
Yeah, I mean, REITs are participating across the spectrum from of course having green certified buildings, which nearly 3/4 of REITs have a green certified building in their portfolio. Many of them have really world-class portfolios, to encouraging the development of renewables. Like so many of the REIT data centers spend a lot of time investing in and encouraging the development of new renewables to power their plants, through to the S, really thinking about the composition of their boards, having really coherent DEI strategies. We're seeing REITs working on all of these fronts of ESG.
And from a tactical perspective, why are they attractive right now?
Well, I think REITs had a tough year in 2022, ended the year down 25%. But when we look at underlying REIT operational performance, what we've seen is that REIT earnings have continued to be strong. Occupancies are high. Actually, in the third quarter, REIT earnings were at an all-time high. And so right now, we really think there's a disconnect both between public and private real estate and a divergence between REITs valuations and their operational performance. And I think what we're seeing in 2023 is the beginning of that recalibration.
Right. So, and then also, I mean, they're also used to derive income as well, right? Because they yield so high because so much of the money goes back to the shareholders.
Absolutely. That dividend that plays such an important role in corporate governance, it's for income-driven investors. That's why REITs, both equity REITs and mortgage REITs, with yields that typically run about twice the S&P 500, are great components of that income portfolio. So what we often see is individuals, they've got REITs in their portfolio when they're young because they're looking for capital appreciation. As they get into the deaccumulation phase, they're using their portfolio more for income. They're keeping the REITs in there because they want to drive that income.
Right. So, and then my final question to you is, are there sectors within the REITs that are performing better? You'd mentioned data centers, you had mentioned cell towers and so forth. Let's say commercial versus private real estate.
Yeah, so the REITs give you access to really 10 unique property sectors. And what we see is that, through time, depending on the cycle of the economy, different property sectors are going to sort of be performing better or worse. In January, some of the best performers were industrial and logistics facilities, data centers, and interesting, the best performing sector was hotels, as I think people are seeing a little more optimism in the economic outlook. And of course, we'll learn more about that later today. But so it gives you a great diversity in terms of if you feel like a particular sector of the economy, and therefore the real estate that underpins that is going to outperform, you have the opportunity to get into that sector of the economy.
Interesting. All right, John, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.